What's up traders, welcome to Failure to Displace. In this video we're going through live price action. So I've recorded my session today from start to finish and I'll go through the highlights. We had some really nice entries, a textbook macro entry in macro number 1, which ended up in a break-even trade, so we just need to consider our trade management on this one. And then macro number 2, there's a great comparison between why we wait for engulfing candle closes as opposed to not waiting for them. So we'll run through the analysis of the two potential entries in macro number 2 and why the second entry was the one that we took. So we're back just as the macro is about to start. We can see that we have swept those highs we initially highlighted. We haven't got SMT here, so they both swept them at the same time. So we could be looking for a reversal here because we have taken the Asia high on the Euro and the Asia low on the Dixie. Drop onto the 1 minute, wait for the session to start. If we're looking for longs, we really want to pull back into these areas. I don't want to be taking a long up here, so I'm going to be looking for a short trade having swept the Asia high. We do have obviously low resistance liquidity down here on the 1 minute, so aim for some relative equal lows down here and down here. There are a couple of levels we could potentially pull back to. So the macro is opening. Let's watch this hat low. We'll swept that swing high together, so we're looking at this swing high up here. And session high, if we do take those. So we've got a little bit of SMT before the session started. We'll put in a high, a low here, whereas we'll put equal highs in here. So there's a slight bit of SMT at this point. Euro's going higher while the Dixie's going lower. Oh, here we go. Dixie's going. So we had SMT there. Unable to break the high on the Euro. We did pin the high on the Dixie. Inversion fair value gaps on both. We can get a closure through. And this would be a short trade. Expecting at least low hanging fruit to get ran. So there is the trade. So this is a short, close there, stop loss above the high, break even after sweeping that low to our down here. Have to be quick. So we enter on the candle close. And this is based on SMT here. Swept some liquidity, closed over the inversion fair value gap on the Dixie. Unable to take that high on the Euro, so we just created relative equal highs here on the Euro. We have an inversion fair value gap here. We expect this low to get taken. Watching this low, if Dixie takes this low, that's not a good sign. If Dixie takes that before the Euro does, then that isn't great. So bear in mind this is an inverted chart, so we want to see them both acting the same. We want to see the Dixie dropping, the Euro dropping at the same time. No follow through, so this is not exactly what I'm looking for. I want to see some follow through here. We've had that displacement, we want it to continue now, expecting the macro to push. Dixie still hasn't taken that low. I'm looking for a break of that low. There we go. So we've broken the low, move our stop to break even. Now we've taken the low on the Dixie, so that's playing out. we expect this to drive now for our 2R. Close below that low. You can see Dixie gapping lower. No follow through, which is not particularly great. We would really want to see it start displacing through this low, which is why we're aggressive with the stop loss. And that's break-even trade there. That's a stop out. We can see we had no continuation of that engulfing candle, so in the macro you expect these to just continue driving. It's a really nice wick that we got here. So you would have hoped that we would just start displacing through this level of liquidity and then driving lower, going for these lower points where we could potentially expect a reversal, and it just hasn't done that. One thing I will say is that we have had a big move. You know, price has been moving prior to the macro here. It means that you could expect this to be a consolidation macro, and potentially macro 2 will be the one. This is the kind of action you expect. So we just had this stall as we took the liquidity, which I would have liked it to have. So it's a shame it's come back. And that's the 2R, so that would have played out. So this is one of those instances where being so aggressive on the break even didn't play out. It may have been more worthwhile looking for something with a little bit more room. You know, 1-to-1 is here. So you can see we started displacing through the previous session low, closing over this fair value gap. We built an order block here. So these two up closed candles are an order block now, which means that going break even after we'd broken through that order block would have potentially been more sensible. That would have been a logical stop loss. But then being aggressive in my backtesting has saved me on quite a few losses. So you just need to backtest this yourselves. Get onto FX Replay, backtest yourself just to work out your own trade management strategy. I'm still trying to figure it out. So that was break-even trade for me, although the analysis did play out perfectly. So the setup worked really, really well. It was just trade management that let us down. We'll jump back into macro 2 and we'll analyze what happens in macro 2. So this initial trade was a great trade. The bias was correct, having taken the Asia high. Currently running at over 6R. So it's where we need to monitor trade management. And from it, it's a shame to have got stopped out break even on that one when it has run, taking the various levels we were looking at. See what we get coming into the next macro. Indeed, how we're going to sweep this. So displacement's definitely to the downside. We're very close to this low. I'm actually expecting the low to get taken. So if we're bearish, this order block should hold. This one definitely should, because that's the origin of the move. So these are older, these are yellow, these pink shaded areas are the older inversion fair value gaps we were highlighting. So we're looking for SMT. You can see when people question if these are macros or not, look at the volume that comes in as soon as this opens. This is why I do trust that these are official macros, because you see this time and time again. First minute of the macro and price is already skyrocketing. So we're into an order block. We've swept these highs, so we'll look at these highs now. So we're into the order block. Go and see if one of these takes the high where the other one doesn't. That would be an indication. This is a very large fair value gap, large displacement. There's no SMT at this point. Close through these inversion fair value gaps, so we can move those to one side. We'll delete that break because that's been closed through as well. You can see the reaction off that order block that we highlighted. We've got this 15-minute IFVG here. So that's overlapping the order block that we highlighted. And then likewise, Dixie has just tapped that IFVG. You've created relative equal highs here. And this did create a high there. Very minor. Obviously we're not closing. You have this as the inversion fair value gap. We haven't displaced through this with a large closure. Likewise with Euro. That's an FVG. Because we had such a clean entry in the first macro, hesitant about the second macro now. This would be a second trade of the day, which I'm not a big fan of. We've closed through the fair value gap, but I wouldn't class this as displacement. So I wouldn't take this as a trade. Although I do believe that our target is here. So we've got an inversion fair value gap. The stop loss would have to be up here. Low hanging fruit would be here. So I'm not taking this. 4.5 pip stop. To our break even would be taking this swing low. This isn't an entry though, because this isn't an engulfing candle. I'm just monitoring this just to see. I mean, we have closed through on the Dixie as well. If it's gonna go, you want to see acceleration through that low hanging fruit. You've taken the low hanging fruit. So again, this is theoretical. I've not taken this entry because I didn't think that this was a strong enough drop. I'll be having my stop at break even now. Because we have taken that swing low, initial draw on liquidity. We do have a little order block here now, so this is a good sign. If we are bearish, we shouldn't expect a closure above that. So maybe a more sensible stop loss would be above that high. And that's break even. So see if this was a good decision not to take this or not. So you can see we did have SMT. The Dixie broke this low, whereas the Euro didn't. It created a higher low. So this is SMT at this point. So again, an indication, bullish SMT, that potentially the trade isn't going to play out as we would expect. But because this was such a large fair value gap, this inversion, I would have wanted to see one candle close through that without this stalling. You know, in this price run, you can see that the bullish candle was bigger than the bearish candle, so that doesn't indicate to me that the sellers are on board yet. So we're generating SMT here. This high is intact on the Dixie, on the Euro, whereas on the Dixie has been taken. That's this candle on the Dixie. We've got bearish SMT here, but there's no inversion fair value gap. You'd still be in the trade if you'd have used this order block as the logical stop loss placement. You would take the stop above that high. Euro's taken the low. Dixie not yet. Euro swept this low, the Dixie hasn't, so it could end up with a reversal here. We've taken the low here, unable to take the low here. This initial entry that we didn't take because it wasn't an engulfing candle is currently playing out. The target, funnily enough, would be to sweep that low there. What would be ideal is sweeping this high, leaving a fair value gap, so we can invert that and then taking a run on the low. So I have SMT up here, so we can short this, taking this liquidity, or indeed sweep this liquidity for a reversal higher. But right here, there's nothing to do. So again, we're back to entry. So if you were in this trade, you would definitely have been break even, because I would have. This was an aggressive break even. This would have been 100% moving to break even. We just retested it, so we can see that there definitely isn't the displacement that we would want inside a macro at the moment. We can see Dixie threatening this high. So Dixie's taken that high, the euro hasn't. So right now we've got SMT, we have a volume imbalance. With an engulfing candle. "13 seconds left on this." So this is the entry short if this closes nice. Yeah, we had SMT, so enter there at market, stop loss above. Go for 2, which is more sensible, which is aiming to take a short to sweep that low. Low hanging fruit is here. So the basis of that is SMT at this high, and I'm using a volume imbalance, not a fair value gap. Relative equal lows. So I haven't swept the lows yet. We would want to see a sweep of these. I will be aggressive because this is a volume imbalance, not an FVG. I want to see a sweep of that so I can go break even. Let's get rid of the first entry because we didn't have an engulfing candle, where we did have an engulfing candle here. So we have SMT engulfing candle over a volume imbalance, not an FVG. I want to see continuation. So there we are through. So that is break even here. Trailing stop loss. So we just want this to continue lower now. Eyes are on this as that session low that we were targeting. That's our SMT. You can see a much tighter stop loss, so we've only got a 2 pip stop loss on this time. It's the engulfing candle that's giving it away. And we just want a continuation through these levels now. We don't want it to start consolidating and coming back. The Dixie is lagging. This is an area where you need to have really tight spreads, or allow for the spread when you've got your trailing stop. It just needs to run this area now. 9:27. So we've got 3 minutes left on this candle before the macro ends. So this is the acceleration. We've taken the liquidity that we highlighted, and we're into that New York's PM session macro. The macro low is just below our 2R. Should have closed out, yeah, so we're above 1R now, so your 1-to-1's done. This is a point where do you take profits at this area just to bag something, or let it run? Again, with the displacement and what I'm seeing, 2R is a very conservative target. If you're on the right side and you get your entry, I'm seeing 4 to 5R consistently. And this is an example of waiting for your confirmation, zero drawdown, and it's gone. Whereas we didn't have the confirmation of the engulfing candle here. We had to undergo all of this consolidation. That engulfing candle shows us we're on the right side. Now again, you've got to be aware, Euro has taken this liquidity, whereas the Dixie hasn't. So we're a long way from taking the liquidity on the Dixie. So we do have SMT on a higher time frame at the moment. We've taken the low. Dixie doesn't want to drop. We're still building SMT, so I would be tempted. Move my stop loss above this high. So we're expecting this to be an order block now. We don't want price to go any higher than that. Again, aggressive trade management, because I'm not liking this. Should just be displacing lower if it's going to go. We've got SMT here in the fact that the Euro has broken this low, whereas the Dixie has failed to break the low. And gap down, nice. And there's the 2R, so lovely winning trade. Did eventually get there. We were about to take the low on the Dixie, and as I've mentioned, 2R generally is a conservative approach, so you could find that we do take this swing low here, bag in, yeah, 3 to 4R if this wanted to run. So 2 great trades in the macros this morning. Break even on this one, no drawdown, 2R winner on this one. Break even unfortunately in macro 1 due to trade management, but that would have been, if you were holding that, you would be up to 8.6R now from the open of macro 1. So leaving runners, you could be well in the profits here. Having low resistance liquidity, obviously engineered all on this rise before macro 1 opens, and then once we get our entry, expecting this low resistance liquidity to get swept. Nice 7R if you were just anticipating these relative equal lows to get taken, or run it all the way down. So I hope you found that useful. 2 great trades, and an analysis here on why I didn't take this entry, and good proof as to why we wait for the engulfing candles with clear closures, because zero drawdown, when we do wait for that, be a little bit more patient to get our signal. The zero drawdown straight to target, whereas with this we would have endured quite a bit of back and forth, and we still haven't hit the 2R yet on this initial inversion fair value gap entry. So if you found that analysis useful, please leave the video a thumbs up. Any questions or comments that you've got, please leave them down in the comment section below. It's always great to get your feedback, help me understand where I can do things better, and highlight things that maybe I've missed during the session. So yeah, greatly appreciate that. And if you're enjoying the videos, do consider subscribing. I drop videos like this more or less every time I take trades. Seen some great growth on the channel, so it'd be fantastic to have you on board. Again, thanks for watching, and I'll see you again in the next video.